Big picture analysis, a coming correction in silver and gold. Of course, those of you that have followed me know that I've been very bullish on both of these metals and looking for higher prices, which they both certainly have gotten up near our targets that we had for these markets, and actually beyond our targets that we originally showed. Now, it looks to me, based on our bigger picture analysis, in other words, looking at the monthly charts, that there is a likely correction ahead. Now, based on the amount that this market has moved, it could be sharp, and based on the phasing I'm going to show you right now, the declines could be sizable. That probably would look like even a shakeout, like it has other times. But I think, and I'll show you, that it would be a very, very good buying opportunity were that to happen. Let's take a look at the silver chart first. And this is a monthly silver chart going back to 2004. So we have over 20 years right over here. And of course, it looks like a bunch of squiggly lines, and this is our reversal scout right there, that moving average that's on there. And that's helpful to us in understanding the momentum and the rhythms that are in the market. I'm going to put the cycle analysis over this, and you will see how things just begin to absolutely pop out as we look at this. So I'm going to go to our analysis that was just updated, and you can see in here all of a sudden, wow, the cycles are just absolutely popping out. So what does this mean? Well, these are what we call harmonic families in here. And when you look in here, there's a big 168-month cycle that's right in there. That is very continuous. If I blow this out way over here, you will see how those cycles go back, well, for decades. Now, how they break down is what's really important here, looking at the cyclical patterns that are in here. And what really is important is where there's a nesting here in this intermediate and minor cycles as they come in here. When you get into these periods right over here where the upside move runs out of energy and it goes into a correction in multiple periods of cycles, you get the biggest downside movements. And I've highlighted those in yellow so you can see where they come in, and there's a nesting. So this was 3 cycles nesting, this was 2 cycles nesting, this was 4 cycles nesting, as you can see right over there. So we're coming to a period right now where we have 2 cycles that are nesting right there. So you have, in this case, where you had this break right over here, where the market fell. I mean, this was silver moving down from 30 right over there to around 17.5. So this was a very sizable decline. And during these corrective periods, the declines can be sizable because you're essentially shaking out a lot of longs. You can see in here that this cycle right over here, which of course is 3 years long approximately, finished well above where it started. And that's what makes what we call a bullish configuration. And of course, this one is way, way above where this one started over here. And we were very bullish during this period as we saw these cycles turning upward. And here you could see where it had this consolidation, gave us a little buy zone, and when it broke out, it just absolutely exploded. Got through those first targets, and then it got way up in here into these next targets. Let's look here at this cycle, and this is what's really important, where you have this nesting period right over here. And gold and silver have perfect synchronicity on this, and I'll show you the gold chart. So here we are coming into this yellow timing zone right over here, which points out to sometime end of the year through the first quarter of next year as the ideal trough, where that lines up right over here. Of course, it could be a few months on one side or the other. But once this top is in place, then it tells us that, and we look at the shorter time frames to get that knowledge, it tells us that this corrective phase will then happen in this yellow zone. This is an important level, which is the 78.6% level from the all-time highs at around 42.12. Now, right up over here are other resistance levels in here that we put there. The all-time high at 49.77. Remember, it got up to $50, near $50, and these are other fib extensions up there. Now, we don't know for sure whether this is going to continue to blast off and get into these levels above $45 before we get into this correction, but once the correction hits, we'll know that because we'll be getting downturns in the daily and weekly charts. Right now, we don't have that. All this is a heads up that there's a correction coming, and when it comes, it's likely to be where there's a shakeout. So the highest level of support right over here, which is the dominant 23.6, and here right over here is a minor support. So the dominant comes off of this low, the minor comes off of this low, where this minor cycle was right there, and that points to levels over here around 36.5, 36.25, which is a reasonable pullback. If you look at all of these other periods where it pulled back, well, those declines percentage-wise were bigger than what I'm suggesting right now. So this is a pretty bullish call when I talk about a decline only to 36.5. That is if the peak comes right over here. That, in my opinion, would be an excellent buying opportunity. And you could see for our members, we have this labeled as a buy zone. So this is the beautiful harmonics in here. If you want to learn about cycle analysis, go to asklim.com to the workshop page. There's a tab up on the top of the page, and there's a free video there, some free information. So you can learn about our workshop and learn the basics of cycle analysis looking at that. So again, these yellow areas are periods of high risk, and we are coming into that fairly soon, if not right now. This extreme bullish translation that you see right over here, which is this cycle rising for almost the entire time period, is very bullish for the time frame after this corrects. And you can see in here, all metal potential surge 2026 and 2027. That's when I believe we're going to be getting to all-time highs right over here. So that is a look at the silver market. Let's switch this over to the gold market, /GC, and this is going to look pretty similar. You can see in here these beautiful cycle harmonics and these yellow zones, this period of high risk, and the same thing that we see right over here where we look at this time frame. Let's just look at this last cycle and where we are right now. And that gives us into this period of correction. Of course, we don't know whether this has peaked yet, and the ideal troughs are out here late 26 through late 25 through early 26. And you can see that, well, the next levels of resistance are around just over 4,000. This area up here is 4,200. And it certainly could spike up through there before we get into this corrective period. Again, we look at shorter time frames to tell us when the peak is in place, and we don't have any sign of that yet. So we've been extraordinarily bullish. You can see in here in beginning of 2025, I thought that what was going to happen was that there would be a trough or a minor decline into February or March, and then through June, a rising phase. And you can see in here, this was where that low came right over here, early 25, and then the market moving straight up over there. So well beyond the target that we had, where we thought would be up to about 2,800. It blasted through that, of course, and got much, much more bullish. And again, we're looking at a pullback in here likely. We're at the peak here at the top of this fib extension right over there. That's the 100% fib extension. Then the support's right over here around 32.70 down to around 32.15. That would be the expected target and buying opportunity if it got down there. And of course, it could be sharper. It depends on what kind of a shakeout we had and what the conditions were of all the markets, because there would likely be during that period, it would probably line up with a lot of assets getting sold, a lot of risk assets, because the stock market, of course, has gotten extraordinarily high and to extraordinary valuations. So somewhere in this period, the gold pullback and silver pullback will probably be in alignment with pullbacks in other markets. So that's often what happens historically. So this points to, again, a pullback into late this year or into early next year, and of some significance, enough to hurt, and enough, of course, maybe to give us a good buying opportunity. Again, we do not see the peak yet in these cycles, and if I go back, you could see the extraordinarily harmonics in these cycles. We're in this period of 2 cycles correcting right in there, and that is likely to bring the pullback we're talking about. I'm not saying to short this market, because it's extraordinarily strong and all of the momentum conditions are incredibly good, and they have been, and that has kept us on the bullish side of this market. We're going to look for the short and intermediate term signals that we are getting into a corrective period. Of course, our members will get that information from us when we believe that it's a high probability that that has begun. That is the big picture of the silver and gold market.